Was Kuroda backed into this? Did he have to move? And is this something that's going to force Mario Draghi now to respond?
This feels like it, given only a few weeks ago, I think, he was just kind of pushing back against the notion of negative rates, but clearly the yen is an issue right now. It's not just against Draghi even, it's just that the sphere of global liquidity seizure, global risk aversion, China, oil, everything, that's going to continue to drive risk aversion, the yen higher, and he felt that action was necessary.
Jeffrey, Governor Kuroda also says, of course, that the BOJ will cut interest rates further into negative territory if necessary. Now, I spoke to him in Davos last Friday. We didn't discuss negative rates, but he said he will do whatever it takes to get to his mandate. Have a listen.
If necessary to achieve 2% inflation target, and particularly if underlying inflation trend is seriously affected, then if necessary we can expand or further strengthen our QQE in many ways. There are many ways to further strengthen, expand QQE.
So, Jeffrey, one of the concerns with the voters against this negative rate is that actually they were concerned that the markets would imply from the move today that there would be a limit on asset purchases. This doesn't feel like that, right? This is Governor Kuroda trying to do as much as he can and leaving the door open. Am I right? Well,
if you look at the initial reaction in stock markets and yen, so yes, the first bounce, and then it fell. So Nikkei was actually trading below the open at one point, and then we rallied to a nice, close to 3% rise. So I think initially they were shocked that, yes, this is easing, but there wasn't a quantitative element, right? So is that a problem? So, but all of this is an experiment at the end of the day. No one knows. The SMB doesn't know. The ECB doesn't know, what the impact of negative rates will be. So it's a very small step right now. If you look at the details of what they're trying to do, so it's marginal rises and balances, which will be, charged at this point. If it is going to be effective, the yen is materially weaker or doesn't strengthen at the very least, I think they'll be happy with this for now. Now, they won't rule anything out. It's going to be a combination of the two, just like the ECB, just like what they're doing in Sweden.
Brian, from an equity investor's point of view, as Jeffrey says, we don't know what the ultimate result of this is going to be. But since the first of the year, we haven't really known why markets have gone down. So does this maybe put a psychological floor under things and end the market rout?
No, I don't think so. I think the comment, the word that Jeffrey used that was most poignant was experiment. And these central banks are still more or less experimenting. If you think back to the credit crisis, it was unprecedented. Right? That's what the word everyone used. The only comparison we could make was the Depression, right? So we needed an unprecedented policy response by the central banks all around the world, the Fed, and we got that. The unwinding of that policy response, if you will, why shouldn't that be just as unprecedented and call for experimentation that Jeffrey just mentioned? So, yes, I agree.
Brian, you're firmly in U.S. stocks, so when something like this sort of rings a bell halfway around the world, does it make a difference to you when you come in the morning? It's definitely making a difference to global stock market indexes, but what about someone like you in funds?
Yeah, I try my best to ignore it as much as possibly can, and here's why. As a mid-cap manager, most of the companies that we invest in are companies that have most of their operations here and the vast majority of their sales here. And they're bringing great growth and innovation to the market and to the world. And I will tell you, in speaking with these companies, they're doing important work. And whether the dollar-yen exchange rate is X or whether the price of oil is $29 or $33, they're still going to working hard, bringing great innovation to the U.S., to the global markets, whether it's in enterprise security, keeping the bad guys out of our networks, or bringing other technologies.
Jeffrey, when you look at, and it was interesting, Brian, going back to what you said, this is an experiment. So if you look at the BOJ tier system, right, for these negative rates, negative rate is much weaker than we had here, comparable moves by the ECB and others. But what do we know about the side effects? Are you uneasy by the fact that everyone is starting to experiment with negative rates and we don't really know what the end game is?
Yeah, if you look at the comments, from the Swedes, the Danes and the Swiss so far, they really haven't seen any side effects in terms of market transmission. So, that's good. good for now. Now, the problem here is what about the political side effects? What the Swiss are worried about is will banks pass it on to retail, and we know, many banks have announced above 100,000 Swiss francs. As I think the S&B published, above 100,000 Swiss francs time deposits are 20 below, right now. So if this happens on wide scale, if Japan, for example, if you actually start to get banks passing this on, then you get mass cash flight from banks. I think that's the biggest risk. But so far we haven't seen it yet.